Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at the S&P 500, the Dow, as well as the NASDAQ Composite Index, and I'm going to go over my analysis and thought process, and hopefully you come away from the video with some extra knowledge on technical analysis as well as some profitable trade ideas to help you navigate the market here for this upcoming week. But first, if you're not already a member, visit us on the home page and get to know us a little bit better. If you like the free videos and the free analysis we give to you on a daily basis, it's nothing compared to the membership at thetradinganalyst.com. The best part is, once you sign up, you're going to be able to take part in the professional chat room, the daily watch lists, the real-time trade alerts, which are not only given in the live chat room, but also for those of you that have full-time jobs, or maybe you just can't be in front of the computer screen all day long, you're still going to get those profitable trade alerts via text message and email. You're also going to get the exclusive member videos, webinars, and an education from mentors like myself who truly care about your success in the market. It's a great opportunity and we'd love to have you. All right, so let's get into these charts here. The first one we're going to take a look at is the S&P 500. So if you've been following along, we've liked the market on the short side for going on a month now, maybe more, okay? So congrats if you have been profiting, on our calls. Very nice market action. It's very clean action here in the market. So we broke this trend line. I'll just reverse a little bit here. We broke this trend line. There's a touch, several touches right there. We broke it right here. We've been making lower highs, and like I've been saying, we've been waiting for us to make lower lows because we bounced here, same level, bounced here, same level, bounced here for these couple of days, same level, and we finally broke it right here, and that was really the true breaking point in the market right there. So up until this point, we were just kind of trading sideways, kind of, with some lower highs, but we hadn't gotten the lower lows. So we finally got that lower lows coming up. We also closed the week, and I'll go to the weekly chart so you can see it. Okay, so we've got two levels here that we closed below. Here was that support up here about 21.25. You can see clearly that was a resistance level. Okay, and we closed over that with this week. Looked like a breakout. Okay, now we failed that level. We closed below not only this resistance, which was now support, but this support level right here, which is the 2100 level. You can see clearly that's about a month and a half of resistance. That's a big level right here. This is about 2 or 3 months of resistance. So there's a big level, and now it's support. And we just closed the week below that level. So more than likely, we're going to be heading even lower here coming into this next week. This is a very big pattern here. And we've got a lot of distribution up here, a lot of people selling up here, a lot of sideways action. Whereas over here, these are, just to give you an idea of, kind of what it looks like. Over here, these are the Brexit days right here, Brexit, and you see how we bounced right off of there. So we didn't really have any kind of a pattern leading into this breakdown. So normally when that happens, when you just get, a 1 or 2 day dip, yeah, a lot of people panic, but we were still relatively bullish overall. So normally if you're going to see a real drop, it's going to look like we're looking right now. Okay, and what I mean by that is there's a sideways trading, lower highs, building, and this is just a perfect descending triangle. So there's the descending angle right here, and there's the lower support line for that triangle, and we broke below it. It's a very simple and easy pattern to see here, okay? And another thing is we're below a bunch of levels. So we're below the 2100 level, we're below the 2125 level. Now we have some potential support down here. This is really where I think the market needs to bounce to really remain bullish overall. Okay, we failed here, but we can still kind of recover. If we hold here, we can still bounce and make new highs. Okay, so all hope is not lost. But if we really break these lows and break the Brexit lows, then I'm afraid to say that this bullishness breakout here is going to be considered a false breakout, and I think that the market is going to be in trouble. Okay, so you really want to pay attention to these levels here because they are very key to determining where the market is going to be headed next. So this potential bounce zone, 2030 to 2040, okay? 2030 to 2040, and also draw a Fibonacci retracement level from these lows down here to these highs up there, and that gives us a 38.2% Fibonacci retracement. You can see right there at about 2050. So it's okay if it dips, a little bit below. Fibonacci's are not to be used as exact levels, but right in between here, this is the 38.2% Fibonacci retracement level, which would be a total normal retracement, even down to the 50 level down here. So if we get some kind of a big flush down here and then a hammer, then we can bounce down here. But me personally, I don't just like buying at bottoms. Okay, I like trading with the trend, and right now the current trend of the market is down. Okay, we've got a lot of things pointing down still, and I haven't gotten what I like to see as some signs that we are going to bounce. So maybe we'll get these signs down here, but we'll see. So I'm going to cover the Dow Jones really quick here and give you some levels on that. So as you can see, very similar pattern here to the S&P 500, and we can just kind of replace those levels. So for the S&P 500, it's about 2040 that you want to look for bounces potentially, and on here the Dow Jones, you want to look for bounces around 17,406, 17,407, something around there, just above the Brexit lows. But overall, no bounce signs here on the market. We're squeezing out of this tight range. You can see how tight it is. See how tight the Bollinger Bands were and how they're expanding. This usually leads to big moves. So we've barely moved outside of the Bollinger Bands. I think an even bigger move is coming to the downside. And then here on the NASDAQ, we're coming up to a potential bounce zone right here around 49.80 or so is going to be a potential bounce zone. You've got an uptrend line that began here in February. There's a touch, and then that lines up perfectly with the 200-day moving average as well as these previous highs right here. So coming up to some potential bounce zones in the market, but again, we really want to see some signs here, and I'll keep updating you as price progresses, so you're kind of prepared for what to expect in the market. But overall, I'm not really into catching falling knives. The trend is currently still down, and I believe we still have some more downside in us before a potential bottoming pattern. Thanks for stopping by and watching the video, guys. Again, if you're not already a member, visit us on the homepage and get to know us a little bit better. If you like the free videos and analysis we give to you on a daily basis, it's nothing compared to the membership at thetradinganalyst.com. And the best part is, once you sign up, you're going to get immediate access to those profitable trade alerts that our members are getting on a daily basis. It's a great opportunity, and we'd love to have you.